Julie, this is a nice premium on at the opening few trades.
Yeah, they sold 337.5 million shares at $17 a piece, and that was at the top of the range of $15 to $17. So BJ's, which remember was taken private in 2011 by CVC Capital Partners and Leonard Green and Partners, now coming public once again and seeing that strong demand. The stock actually already got a buy rating from Gordon Haskett, saying that this was good value, particularly compared to other types of grocery-related chains, that a wholesale club model offers more value.
Right, so I suppose competitors would be Costco, Walmart, Sam's Club, for example, but BJ's actually has, what, 215 stores now in 16 states?
Yes, that's right, and that's some of the changes that the private equity partners, the private equity owners had made. They'd upgraded some of the stores. They had made some other changes to the company, kind of changing the store footprint as well. So that's the current footprint that you mentioned, 215 stores.
Let's ask Elizabeth Fournier now what BJ's might do with the capital raised.
So they've got a decent amount of debt. This was a big buyout back in 2011. These two private equity firms, CVC Partners, Leonard Green, took it private for $2.8 billion. And it's got about $2.4 billion of debt right now. So their main objective of raising the money is to pay down some of that debt.
It's fascinating because, you know, we think of retail being under siege, right? And yet this looks to be quite a healthy transaction.
That's right. I mean, I think this is a sort of clear sign that maybe the retail apocalypse is sort of easing. Investors are kind of happy to get back into these stocks. But, I mean, it's up at the moment. We'll have to see how it keeps trading.
And it's a big week for IPOs in general. It's not just BJ's.
Yes, so busiest week in 3 years, going back to sort of June 2015. If we think since then, there's been a bit of a kind of lull in IPOs. But this week, we've got 12 listings just in the US. And that's a real sort of sign of the pace.